to this webinar on India at 75 with resilient Indian real estate industry and emerging asset classes. Today, we are privileged to have a very distinguished panel of speakers and panelists joining us. Mr. Bhavesh Maniekar, who is Head Strategy, Corporate Planning and Investor Relations in the Tata Realty and Infrastructure Limited. Welcome, Mr. Bhavesh. Mr. Sanjay Bhutani, Senior Vice President and Head of Data Center Business, Adani Connex. Welcome, Mr. Sanjay. Mr. Ramaya Kapoor, Head Investments Capital. Mr. Kapoor, welcome. Dr. Nikhil Sikri, Co-founder and CEO, Zolo. Dr. Sikri, welcome. Mr. Shubhashish Roy, Network Development Director, IWG. Mr. Roy, welcome. And of course, we have our principal partner, Tata Realty and Infrastructure Limited. And I would like to place on record our sincere thanks to the principal partner, associate partner, International Workplace Group, and knowledge partner, Colliers International, for supporting this initiative. With these words, I would like to welcome you all. Of course, we have Mr. Piyush Gupta, Managing Director, Capital Markets and Investment Services, Colliers, who has also joined us for this release. So first, I would like to request Mr. Gupta and all the distinguished panelists for joining us for the release of FICCI Colliers white paper on unveiling the potential of emerging real asset classes. And Mr. Gupta, I would request from then on, after post-release, if you may moderate the panel discussion and take the program forward. Thank you. Thank you once more. Sachin, you can, yeah. So, Mr. Piyush, you may like to say a few words first about the report. And I understand the report will be available later to the distinguished delegates, participants. But if you wish, at this point, you may very briefly say a few words about the report and then, of course, take the panel discussion forward. Over to you, Mr. Piyush.
Sure. Thank you, Manab, for this. Today's topic, India at 25, with the real estate being so resilient, and we're talking about emerging asset classes. And I think so the key paramount for the report and where the industry is today, we are looking of assets beyond our traditional, retail, residential, commercial. And where the industry has shaped up, we have the new concept of shared economy, whether it's co-living, co-working, which digitization. We have data centers business picking up. So this is giving huge opportunities for newer, concepts, newer market players. And hence, we think, next 4 to 5 years time, there's a tremendous potential for newer market players to evolve, this business. And hence, with that, we will link more and more investment as well coming in these sectors. So with this, we release the report, and thank you, FICCI, Manav, for organizing session. And I think this is indeed a very interesting one at a very important juncture of the market, where we with COVID, we are kind of hopefully on the tail of the COVID. The new business is evolving. The shared economy, the newer asset classes are taking more and more shape. And this is just an evolved version of doing business. And the overall, the newer concepts are just complementing our traditional asset classes of residential, commercial, or we talk about storage, which is now more and more getting, digital. So with this, maybe we can, first start our discussion with, Nikhil, on shared living. We have seen a lot of action in last 3.5 years time, and the growth of entire co-living, is being driven by millennials, comprised of single, young, working professionals. We have more than 40 crore people who are millennials and are, 1/3 of overall workforce. And the taste, the preferences, the dynamics of this sector is completely changing. Though we had seen some kind of a bump going downwards during COVID times. How are you seeing the overall business evolving, in years to come? And specifically, if you can compare what was pre-COVID, there have been transition during COVID times, and how do you look growth coming in this space?
Sure. Thanks a lot, Piyush. Appreciate first of all, and everybody. Hello. So from co-living standpoint, I mean, we need to look at it in three different phases of time. One is immediate term, then there is short term, and then there is short to medium, and then there is long term. As a long-term trend, co-living is a fundamental follower of urban migration. So wherever you will have urban migration or any place where there is consolidation of people, co-living by design starts operating, especially if the concentration of people is much higher. Like we've observed most Indian cities, they are very concentrated compared to a lot of US cities, which we can see that they're spread over large spaces. So in high concentrated urban spaces, co-living by design is sort of the answer to needs of young professionals who are not married and want to live at a convenient and affordable place, and which where they can also sort of feel a community. So co-living is follower of urban migration. Pillars of co-living are affordability, convenience, and community. So that sort of makes co-living a good long-term story, no matter what. Because till the time there's urban migration, unless the urban migration story breaks, and if that breaks, God knows, I don't know, then a lot of other businesses need to rethink, and a lot of businesses need to think about it. So that's the long-term side of it. On the medium to short term, immediate term, we are now seeing the trickle to happen because people are coming back. So you can expect the business to be at 90% of what it was by March. And there is a 10% hit that we have to take for next 1 to 2 years, because there is a genuine case of permanent remote work from home, which companies are choosing in different proportions and ratios, but I am expecting a 10% hit there for 1 or 2 years. And then obviously they will hire more and it goes back to 100. The 100 shrinks to 90 and 90 goes back to 100 at a 10%, 12%, 14% growth year on year. So for 1.5 year, immediate term, there will be shrinkage of 10%, 15% or so. And then it comes back in the long run. And timing wise, March is where we see sort of pre-pandemic numbers more or less coming back for most of the players. And so this is like the short, medium, long. And as you asked, how do you see this growing and what are the parameters? The parameters are millennials will keep migrating. When they go, they don't want to get into the hassles of managing their own spaces and places. And that's what co-living solves for: low deposits, low lock-ins, fully managed living. And thus, as a trend, there is no reason why it should not grow.
Yeah. Thanks, Nikhil. And just to follow on before we move on to co-working, how scalable you're seeing the entire this model of co-living is, right? So I think and then this key question comes, and we directly compare this with the overall residential or even co-working or even office. And the point comes, maybe co-living is a too micro, and it becomes challenging to scale. So how you are seeing this from a scalability perspective in India?
So, I mean, it would come as a surprise to a lot of people, but in a very unorganized fashion, it's already a very scaled business. Scale is about quantity, and then there is organization of an industry. So, I mean, we have our own research around 40 lakhs bed, which we have mapped like literally bed to bed in the cities we are present on. I'm assuming because we're not present everywhere and anywhere, and we don't have a team to cover every inch of the ground. So there will be more. And the numbers can go up to around, let's say, 70, 80 or 1 crore. Statistical data suggests something like that. So it's already a scaled business. Now the question comes to make it organized. Organized is from two angles. One is from an asset side organization, and second is from the platform side organization.
Yeah.
So currently the assets in co-living are not the assets that you can get FDI or you can get private equity money into it. These are small time owners who will have 5-6 crores in their bank or whatever, wherever they get it from. And they would have made one building with 30, 40, 50 rooms, 60 rooms, basis their capacity on a small plot size. For it to become large and organized in terms of large assets at one go and organized is the journey we are at. So we have started the journey of the platform platform organization, and slowly building that. And now we have a separate team called, so we have actually two teams. One is capital markets teams, which works with funds to raise money for large assets. And one is a Z assets team, which works with developers to sell their assets in retail, co-living assets in retail. So we started working on the asset side. But scalability is, I mean, that's to me is the non-question, because it's already a large business, very large business. It just exists in a format which does not attract institutional capital. And that's the difference that we as an organization are sort of bridging the gap from a purely unorganized play. You can say like what we are trying to do is what most of the world did to the retail space a lot of years back, where more institutional capital started coming in instead of the small mom and pop shops. But was retail a small play? No, not at all. So that's sort of how the co-living ecosystem is.
Yeah. So essentially, Nikhil, what you're saying is, players like y'all are basically more consolidators. Yes. The market already exists in a very micro form, very unorganized form. You guys are coming in and more as aggregators, consolidators, and giving a very organized platform, whether to investors, or to the end users.
Yes.
Interesting. And if at all we just shift more to co-working, and maybe I may request Bhavesh to come in here. So I think since 2017, we have seen a big bang on the co-living side, and the entire flex place, workspace operators have entered with pent-up demand from startups, and during COVID times, we are seeing even a large corporates are also looking to move to co-working space, right? So how are you seeing now, this business to grow from medium to long term, Bhavesh? Sorry, you're on mute, Bhavesh.
Yeah. Piyush, actually, we see that from 2017 to 2019, the growth for flexible workspace was like about 50%. And, it constitutes like about 14% of the commercial leasing market in 2019, which was the highest year ever for commercial leasing, which was like 50 million square feet of space. So even pre-COVID, we had a very good amount of flexi workspace coming into play, and the companies were absolutely comfortable to move into a flexible workspace, first and foremost. Now, actually, flexible workspace works better in a post-COVID environment too, because previously the concept of commercial space was to consolidate in one location, or maybe two locations in a city. With the pandemic and giving the opportunities to employees with the hybrid working system, more so now, which will be there for the next couple of years, at least post-COVID, is that they would want to work from a nearby office place to their homes, wherever they are living within the city, actually. So that is also going to add to flexi workspace as we see it. The next thing which is coming is about companies now realizing that hybrid work systems are working. Therefore, to commit to commercial leasing space, including fit outs and long-term commitments, which are there usually in these kind of leases, which is like a 5-year lock-in or a 10-year lock-in, depending on the companies and how they would like to view it. It's changing. Therefore, the flexi workspace helps them to scale up or to scale down in either ways, actually. So that is what also we see, that is going to actually help flexible co-work space in the near future. The occupiers are also want lesser lock-ins and other things, which are, it's exactly like co-living, that it allows that flexibility. Actually, if you see this space, it was actually the original business center space. Yeah. Eligible for 5 to 15 employees or 20 employees at most, which is become at a much macro level, where you expand in a co-work space environment to even up to 500 employees. This is excellent for e-commerce and startups or MSMEs or even consulting firms or companies like that, actually, which would like to be on an individual basis, would like to, as professionals, would like to work out of these spaces. So effectively, it gives them a lot of flexibility and networking opportunities, which is very much wanted for all these companies which would want to work out of a flexible workspace. And that really helps them from their business perspective too. So effectively, we see that to commit for large spaces would be at a certain scale and size, actually. I'm not saying that commercial space is not going to work out, because there will be large captives which will be coming into India now that are, global 1,000. Actually, we rarely have about 300, 400 large captives in India, but it would expand to a larger number. So that is also going to work. But they would start it up on a smaller basis from these flexible workspaces and expand over in times to come. So effectively, we see that both these things are really helping the flexible workspace to grow even in the hybrid environment. The last part is about the mobility part of the employees and the attrition rates as we see it in IT companies or large corporates and all that. We feel that co-working space or flexible workspace will work out even from tier 2 and 3 cities, where you're trying to employ an employee and to find it out for 3 to 6 months, and people would use that space even in tier 2 and 3 cities till they migrate into the larger cities and move into this flexible workspace or into the space or the commercial spaces, which they would expand over time. So we see that all these factors are actually going to help out in this flexible workspace market. It's very prevalent in the NCR region, Mumbai and Bangalore, extremely well, but it is expanding even in Hyderabad, Pune, and such Hyderabad, Pune, Chennai locations, and in tier 2 and 3 cities as we see it, on a smaller scale though, but it will definitely work out actually as we see it, and it is there to stay. We feel that it would be in the region of 3.5 million to 5 to 6 million square feet on an annual basis going forward to actually next couple of years in the medium term.
Yeah. So essentially, Bhavesh, what you're saying is, the trend which we saw only for, in larger cities, which is now kind of moving to, second round of cities, which possibly might help, overall people to plan their businesses and to be more attuned to more dynamic situation. So on this note, Subhashish, if I can, request you to, come in and maybe your thoughts on how are, you're seeing, the growth in this side of the business, maybe in for medium to long term. And the second part of the question is, what kind of changes which you're seeing in the model now evolving, whether in terms of design or in terms of commitments from the landowners or from the occupiers? You can throw light on that as well.
Sure. Thank you, Piyush. And hi everyone. I want to go back a little bit, to share some data which will help us understand where this industry was 5 years back and where it is today, and what we are looking forward and what is the potential. 5 years back, this industry was being dominated, or the operators in this industry was around 20 with nearly 200 locations. And as we speak today, we have around 350 operators with over 1,000 centers all across the country. So this is what we have witnessed in last 3 to 5 years time frame. Now, what it tells us is, and where the position of the industry has changed, co-working industry has changed, is we were considered earlier as a fringe player, or a fringe industry. Today, co-working can say that, we are mainstream, because as of 2020 end, co-working industry was occupying around close to 40 million square feet of commercial real estate, which is around 5-6% of the total stock, which is very close to what BFSI and e-commerce occupies. So you can't ignore this industry anymore. It's a mainstream industry, and it's expected to grow, what Bhavesh mentioned, easily 5 to 7 million square feet of absorptions, going forward. And it has the potential and the capacity to double in anything between 1 to 2 years time. And that's what the opportunity we foresee. In terms of acceptance by investors, landlords, customers, it is happening all across. Earlier, people were a bit skeptical to have co-working in their business park. Today, it has become a necessity. It's an asset class, or it's a format which each and every large developer or an investor wants in its portfolio. It's a must. Any new development happening, we get a call. So maybe other operators also. So which is a very, very encouraging sign. We had all kind of customers even pre-COVID. We had multinationals, we have MSMEs, we had startups. Pandemic has pushed the acceptance or adaptation to traditional office space to co-working faster. And we expect that, the growth, which will accelerate the growth for this industry. At what rate? Our reckoning that what I mentioned some time back, that this industry should double in anything between 1 to 2 years time, depending upon how we see the end of COVID and how quickly customers or occupiers willing to shift to a hybrid model. And also it will coincide with a lot of new space requirement which is coming up, and also the lease end of a lot of occupiers who are at the end of their lease term.
Right. Yeah. I think interesting point Subhashiji brought out, because if at all we're talking about an absorption of 5 to 7 million, and which may even double in maybe a couple of years time. So anywhere between 10 to 15 million of co-working absorption will be about 25 to 30% of the overall grade A absorption in India on co-working side, which is a very significant milestone to achieve. And if at all this is achieved, it will be a full-fledged industry, not a fringe industry, what we've been all discussing about. Interesting. From this, maybe we move in more to the digital side and data storage, and we'll request Sanjay first, and then maybe Ramey, your thoughts as well. So we have spoken a lot about the digital transformation, rapid increase of mobile phones, broadband services, India being the largest consumer of data, and all this has kind of accelerated in the COVID-19 times with the use of more and more digital media. So any digital transformation requires data center to cater to the growing demand and suggest the potential of this asset class hold. In fact, even our research says we have currently about 657 megawatts of co-location data centers, which is about 9.5 million square feet of built up space. So Sanjay, in last 12 months time, what we have overall seen, lot of international operators coming in, investors now coming in. In fact, every week we are seeing a new development on the data center side. How are you now seeing what has happened in last 12-24 months time, right? And are you seeing the growth and demand for data center will just grow exponentially, or you think possibly we might kind of hit something like a stagnancy in terms of growth?
Thanks, Piyush. This is a very relevant question. I think from a last 12 months, year 2020 has been very transformational for data center. It has actually impacted all aspects of modern day life. And in all the asset class, what we're discussing here, I think new emerging asset class, which is DC, has witnessed a massive growth. And 1/3 has come in 2020. Our data center has grown from 350 megawatt to 450 megawatt, which is almost about 100 megawatt came in last 12 months. And it is going to go further up in next 3-4 years. We clearly see this market is touching about 1,000 megawatt, and which will be almost 23-24% CAGR on this side. And in terms of million square feet, I clearly see about the development which is taking place. It's about approximately ballpark number 60 million square feet of numbers coming in the next 3 years. Who are the users of this? clearly the tech giants which are coming in out of this 450 megawatt which is there, 48% is used by them. And this is a clear evidence people have got a strong belief, and the actions on a scale and the sustainability side taken by this asset class is going to grow maybe next 10 years. So this asset class is going to grow not only from a data center perspective. I think the other assets which are related to data center, that will also going to see a big change, which is not yet we have seen, but that is also going to give us a big boost in a related asset class. So data center is going to be here for a longer run, and data usage on a mobile side or a enterprise side is growing immensely. And currently we are using only 15-16% cloud adoption. It's a long rope.
Yeah.
It's a long rope we can cover in next 10-12 years. And if I have to top up with the law, which is not yet in, which is data localization, which will actually further fuel to this growth. Yeah.
Yeah. Interesting. And Ramey, would you want to add on to Sanjay, and specifically, there has been capital coming in. We have now more favorable government policies. We have newer locations. Earlier, we were just talking about Mumbai and Chennai. Right now, we're talking about East. We're talking about Noida again, which has become a more hub. And also, Ramey, from a perspective of the global players, whether the global operators or the operator developers, investors, like someone like you all, is the eye that India is kind of becoming like a focal center for data center in years to come? Is that the perspective being spoken about in the international forums and organizations?
Sure. Thank you, Piyush. Firstly, thank the panelists as well as Vicky for the invite for this discussion. It's been quite intriguing learning more about the emerging asset class. So data centers as such, Piyush, if we even look at the pre-pandemic and post-pandemic world, to put it into two sort of timelines, this is a growing asset in Americas, in APAC, as well as India is leading the growth in terms of APAC. If I put it in numbers, last couple of years, it would have grown about 6% in the Americas. In APAC, there would be a 10% growth. India has a CAGR of say 20-25%. And even in the future forecast, that is what is projected. This is merely because there has been a shift from having data centers as a smaller location on premise of say all consumers or say IT companies. They would have manufacturing companies, banks, NBFCs, so on and so forth. There has been a push towards storage of data in co-location sites. COVID also boosted this sort of demand for data center. But on location, on-premise data centers were not classified as essential services, so many people couldn't really access them. The other push I would see is, as Sanjay mentioned, about the hyperscale or the cloud players who are not only looking at India from a data privacy, which is the government's endeavor to have data of Indian stored in India. There's also a perspective of the sheer size of the market, because you would have the mobile penetration, the data usage, social media users. So that is a large chunk of the market for them. And obviously, there have been announcements of around $6 to $7 billion in the recent 12 months of data center operators and players coming into India. A similar size of announcements have been made by hyperscale players and cloud players. So this is really a period of inflection where we are moving from smaller sizes of data centers to international quality builds, where moving from say 10 megawatt of IT load to maybe having 50 to 60 megawatt of IT load in different phases. And that's why currently in the next 3 years to 5 years, we are positioned to even double or triple our installed capacity. So as far as major global players are concerned, yes, in the recent past, there have been some announcements of global data center players looking at picking up stake, either have as they've done in various existing Indian companies, or even operators and developers such as ourselves coming in and setting up shop. So it is really a nascent phase even now in India. And over the next 3 to 5 years, there would be delivery, and there is enough demand to meet the supply which will come up.
Yeah. Yeah, exactly. Ramay, and the what we're talking about, going up to 1,000, megawatt and a growth at 25% to sustain in next, 2 to 3 years time. I think that's gonna add significant, volume and value to this business. With this, maybe Nikhil, I can, bring you back here, and more to do with the, co-living. How challenging is to, get capital, right? And the more to do with what kind of yields we generally talk about, in residential, and I'm sure there's a value add which is coming in on a co-living side. For a player like you all, with the yields where they are, so if at all someone wants to raise a 50 million, 100 million to acquire assets, are you finding to get capital easy in the business model?
So our business model doesn't involve buying assets. So our business model is about the tech platform that we have. So we've raised $100 million, almost, bordering $100 million. So till now, so I can't complain. Some people would say that this is a tough sector to raise money. I personally can't complain. It wasn't a tough sector to raise money before pandemic. These are tough times for this, because this is a lot of e-commerce company, pandemic was a boon for them, like EdTech, logistics. Unfortunately, for companies which rely on people to stay in cities, it's a challenging time. So as of today, it is difficult to raise money in co-living, and it will remain so for next couple of quarters. But in the long run, I think there will be a lot of capital that will flow in on the platform side. So I'll now talk about the asset side. Asset side, we are seeing some interest from large investors. As I said, we have a team which focuses purely on capital markets and institutions. So we are seeing some interest from large investors. These are early days. We've crossed the line of thesis building, early thesis approval with ICs, and now we are evaluating assets. And we are at a stage where probably next couple of months, you could hear some announcements on large capital funds coming into asset side. Now, if you want to raise money on the asset as a developer, banks are not very supportive yet. Banks would probably give you more money if you were to just say it's a plain vanilla no strategy project, than you say I have a strategy of co-living and I'll sell it. For some reason, banks are yet not very supportive. But institutional capital has started approaching on the asset side. Platform side, as I said, it was one of the hottest space. There were 30 companies which were funded pre-pandemic in this space.
Yeah.
And post-pandemic also, again, it might get hot. Although I think now, since large players are only remaining, so they might end up gobbling up all the capital. But a lot of capital will flow in very soon again.
Yeah. So just a Nikhil follow on, if at all, we were to, just mention a couple of points which can actually get more and more institutional capital in this side. Is it the sheer lack of size or a large aggregator not being there, or you think there could be some enablers which can get more and more capital here?
I think it's a function of more people getting involved in the ecosystem more than anything else. As of now, it's us and a small team trying to sort of make it happen here and there, because there is no proof of concept. Generally, so if we go back to our innovators, early adopter and late follower curve of all kind of users and all kind of how new concepts and new products come into life. So in some sense, we are dabbling with innovators here and there as of now. Once we go past the innovator stage, early adopters will come in and they will give a lot of momentum. And that's a natural cycle for any product. I wouldn't say that anything is fundamentally wrong right now, which is happening in the co-living side. But what can really accelerate is, I think, little more participations from IPCs, a little more participation and conviction from developer side, thinking a little more diversification. Most developers are not thinking diversification of their portfolio when they're building resi. Most of the resi inventory is sort of like one style inventory. And they have their own reasons. They want to keep a community consistent, but with a little bit of, I think, architectural innovation, both the policies of both the things can be fulfilled. So I think if that happens, obviously it'll go faster. But even if that doesn't happen, the momentum is, I think we are at a very brink of building momentum now. 1 or 2 quarters, you will see all that sort of happening, upper side 3 quarters.
Sure. And the same question to Bhavesh and Subhasish. Maybe Bhavesh, you can first come in terms of getting capital and getting investors convinced about investing large capital, right? Are you seeing this is anyways happening, or you think there could be some enablers to get investors to get more convinced and take more long-term calls? It could be debt, equity, whichever way the color of capital could be. But what is that couple of points which you will, from your perspective, could be for capital to come to more, for co-working? Sorry, Bhavesh, you're on mute.
Yeah. For co-working, it's a proven model now, actually. Here, I would like to say that even large, like in one of our properties, actually a large top 5 tech company, has used a co-working model to expand and to scale the operations in the city of Gurgaon. So I would like to give that clarification that co-working is a proven model across all sectors, actually, kind of thing, from a perspective of getting the capital for its for investment. The co-working model is quite similar to the co-living model, where actually from an operational perspective, they are still signing up leases like 5 to 10 years. Now they would be taking that risk, but the margins are extremely higher than a normal lease rental because they're giving out a fully fitted out space with all the facilities. And sometimes it's built to suit to these kind of clients. And if they can get in that, although the client is paying it on a short-term lease, it doesn't matter if he wants to pay the commitments of a long-term lease or even the security deposits. I think that is fine, because that is the margin they would make with the risk, with realizing that they would definitely need the space. So once you that model, the margins are definitely working out in the co-work model right now. And I think they're getting decent returns depending on space availability at the price which they would want, so that they can sustain and they can do that. So we find that co-work space capital requirement would definitely be available to them at all points of time, as long as the model and the lease and the tenant and the profile of tenants which they have in turn makes it valuable for the investor to put in the monies actually for their in co-work models actually. And that's being actually the developers would also be wanting to go at some point of time, because if this space, as my colleague was saying, that if it expands to 25 to 30% of the space, the developers will move into that model, and some of the developers have moved in actually. So it's a question of time. If it works out that way, then it's just that for a developer's perspective, it is being fitted out space and it is built to suit for the client, and it will work out actually in the long term too, because these spaces are valuable from all aspects in future with the hybrid work styles also actually. So therefore, I think that co-work space will continue to grow in future too actually, and at a good space. That is a challenge actually right now. Maybe co-living needs more comparative. I'm just comparing it with co-living, but it's a proven model actually, as I see it.
Yeah. Thanks, Bhavesh. Subhasish, your thoughts on enabling more and more capital to co-working space?
Right. I see. There is no doubt attracting capital by this industry is not an issue now. I'll take it in two parts. One is, if you consider the current operators, Indian or international, most of them are either funded by a PE, VC, or an angel investor. So fund is already available with the industry. The industry operators are funded by, are adequately funded, and their growth is also being funded. So that's not a challenge going forward. But also, if you look at individual level or a smaller scale, most of our IWG, our deals with our landlord are on partnership. So in last 12 to 18 months time, we see more interest from landlords, developers, investors to even invest in a partnership deal for a single center or couple of centers. That's point number 2. Point number 3 is we are very aggressively signing up franchisees to grow our business. And that's something gives us confidence that, you know, people will invest in our business, and it is happening. And we have signed up 2 franchisees in India to start with, and we are looking forward to sign more. So if you look at these 3, getting franchisees to sign up and take development right, developers and individual landlords willing to invest in a partnership deal for 1 or 2 centers, and operators already being funded and is further being funded by VCs, Ps, and other investors to funnel their growth itself is a sign of this industry is, you know, attracting capital, and capital should not be a problem going forward.
Yeah, no, so co-working space is getting capital, but unfortunately, you know, what happens is whenever any large investor is buying an asset and which has maybe a 10 or 20% co-working space, so they kind of discount. They're saying that's a riskier, you know, mix of tenant. So I think that kind of you know, perception possibly needs to, you know, go away. You know, though the industry keeps getting more and more capital, but this thing that, you know, co-working is a more riskier proposition, that possibly, you know, has to, you know, go with. So with this, maybe, you know, Sanjay, from data center and a sustainability perspective of returns, right? And India as a market, you know, we haven't seen, you know, a history of asset being sustaining for maybe 10 years, 15 years and continuing to deliver returns. What you think can actually drive this to give more confidence to investors that even this asset class, maybe like the other office asset classes, will be sustainable and give continue to hold the asset and give returns?
Sure. So this asset class is a very interesting one, wherein the long term, I think Bhavesh has touched upon 5-year, 10-year kind of deals. Here, the deals are of similar kind of nature. While the investment, when you look at it, investment, return on investment, this is also a long-term one. And the data center is such industry wherein the churn per se is very, very negligible. And once you are in, it's almost a lifetime you are in, until unless there is a mishappening either from an operator side or customer side. So the other important aspect is the investment what you make in the data center is about 6.5 to 7 million per megawatt, versus the return is 1 million per annum. So at least 6-7 years first customer has to stay. Then only you cross your barrier of investment. So that's interesting. But I think the other important aspect is how do we make sure that 6.57 million becomes 5 and 4? And that can happen only when we keep looking at options of a sustainability and bringing in a lot of innovation with the help of tech giants, those who are our customers. They are the pioneers in innovation. I think with them, we can bring in the cost. We can actually optimize the cost. That's one. On a sustainability side, the other important part is this asset class is 50% on a power side. It's not only what I earn as a rent. So if I can bring in innovation, if I can bring in a good initiative which are sustainable, which can give them efficiency, I think this asset class can be for a longer run. longer run. And the kind of deals which are coming in the market now, earlier the deal was 5 year, 2 year, 3 year. Now the deal is 10 year plus 5 year plus 5 year. That gives you a confidence. This asset class is actually, when we go to a bank, if the deal size is 10 plus 5 plus 5 or 15 plus 15, then actually banker also looks up to this is a qualitative value which we are bringing in this DC. So I clearly this is getting improved even from a pandemic perspective. Even enterprises, when they used to budget for 2 year, 3 year, they can give you a deal. Now they are also looking for a longer term. If they are looking for a longer term, they need scale, which India is making, and obviously this is going to give a better return. And from a sustainability perspective, I see this class is much better and very, very, very sustainable. And this is going to get better day by day.
Yeah, sure. Thanks. Ramey, I wanted to ask you on the possibility of industrial and DC REIT. But before that, there's a question from the audience, and this is more on flex, workspace. So maybe I may request, Bhavesh to, give his perspective. That what category of third party, maybe software service providers or a global captive centers we are seeing in this space. So do you have any thoughts on that?
Okay, you see, the captives would like to take a lesser risk actually from an operational perspective, because they would like to outsource everything out actually, and right now outsourcing even the space part of it out actually right now actually. So I see that the large FANG companies or tech companies going forward would be moving towards that model in the flex workspace, more and more in the flex workspace. That's my personal view because of scalability. If you're pretty sure that you're going to just expand with your workforce, which I do not mean with the outsourcing players in the market, but with the more larger companies, that's going to really work out in their interest. And again, flex workspace gives them phenomenal flexibility of different locational aspects of it. See, if you're in one place, if the co-workspace operator is in 10 different locations or 20 different locations, including tier 2 and 3, I think it gives a lot more flexibility at different points of time due to different situations for the employees. I think the core thing in the tech sector, as we see it, is the flexibility for the employees. The attrition rates, they need to really manage it. And this is the best way for them to manage it, through giving them less, transit time or flexibility as much as they want. And that effectively, I see that it's a balancing act between whether they would like to spend the capital on the tech part of it or the real estate part of it, although that contributes only 15 to 16%, but whether they would like to invest or save that capital and pay it on a monthly basis, or rather than block it in that way. So effectively, when you think about it, it's a balancing act between the two, but I think more and more tech startups and all will go towards flex workspace going in future, as we see it actually.
Sure. Thanks, Bhavesh. So Ramey, getting you in, your perspective on possibility of REITs in next 3 to 5 years time from a DC perspective.
Sure. Thanks, Piyush. Also, just to add to the earlier question and which Sanjay answered on data centers as such. So basically, what is a data center? These are industrial buildings which will house a technical requirement of the IT infrastructure, which will be required by your large tech companies, cloud companies, as well as enterprises. So it's one matter about the real estate aspect. Largely, it is about the complex technical understanding, as well as the space and facilities to be managed, the plant and machinery. So having said that, there are two plays possible in data centers. You build the entire data center and have occupiers come in, wherein land, building, and plant and machinery, if we break them up, land would be around 10-15%, building will be around 20%, plant and machinery will be the larger component, which is largely used for cooling as well as power. That will be around 60-70%. World over, what's happening is In fact, out of the top 10 companies which are into data centers, 6 of them are REITs. Right. So world over, what's happening is that in the Americas, the older data centers or even the land and building of the infrastructure, since they have predictable cash flows, these are tenants, occupiers will be there for the longer term, say 10 plus years, sometimes even going up to 30 years. And on the demand side, there's a growth in digitization world over. A pandemic has led to it. What's going to happen is that the first play emerges is that fine, you sell off your land and building and do a lease back. So that is what's been attracting a lot of investors across the board in Americas, in Europe. You see so many deals being signed where the land and building is being taken over and they are enjoying a yield of say 6% in the Americas, or APAC, it would be slightly higher. In India, there is a lack of quality builds which are existing. So the play out here is more of build this out. Building it out also can be probably in a build to suit model where the operator leases it, or you have a company which covers the entire gamut of activities. Now, as far as REITs are concerned, yes, why they would be interested is that this is a yielding asset at the end of the day. These have high yields. So if we even look at the cap rates, which have been globally, cap rates from a grade A office space would have been, say, probably a difference of 150 to 200 basis points. Up until last year, those have compressed for data centers and they've come down to say 50 to 70 basis points. So these are being seen by investors who are maybe active or passive investors. Passive investors will participate more in the real estate. Active investors will get into the technical aspect of things and either value add or add to the business in some sort of sense. So it's interesting when you mentioned, and there have been REITs which are not only data center specific. There are real estate REITs as well, which are diversifying and picking up stake into data center assets. This could be either in the land and building, or it could be entire asset itself. So going forward, yes, REITs offer exit to operators as well. And it also helps worldwide operators to plow back cash into their business so that they can get money from this 30% component at a compressed cap rate, and they can plow it back into the business where data center REITs, which are listed worldwide, they've been growing at a CAGR in terms of their share price itself last 5 years of 15%. And during the pandemic time, they were quicker to bounce back. And the CAGR they have demonstrated is around 15 to 20% in the last 18 months.
Sure. Thanks, Ramay. Nikhil, any thoughts on prospects of student housing?
So student housing is a very, very interesting space, and thankfully pandemic has forced us to accelerate our vision. So our primary vision is about in managed living, which has 4 segments: student housing, co-living, multifamily apartments, and senior care or senior homes. We were pre-pandemic 95% co-living and 5% rest. Post-pandemic, now we have signed up aggressive amount of student housing inventory. We'll be around 60% co-living and 40% student housing. And we are starting our, the senior and the multifamily experiments and pilots as well. So student is a very, very interesting class. In India, it offers good asset opportunities as well. I have come across a couple of deals which can offer around 10 to 11% operating return in student housing hostels, mainly because the cost of land is fairly low there. And due to university, your pricing is not that bad. So from an asset standpoint, you can actually make quite handsome returns at various places. It does have certain interference from, interference is a wrong word, but certain relationships with the political world. So scouting a real deal on the asset side, which has no influence per se, can become a challenge there. But as such, from a financial number standpoint, it does make a good sense and a very good business case on asset side as well as on operating side both.
Great. Thanks, Nikhil. I think since we are in last 5 minutes, maybe I may just request each one of you, since we're talking about emerging, that means all these asset classes will grow big. from each one of your perspective in your domain, how you all think the industry from your perspective will look like maybe in 5 years time. Maybe starting from you, Sanjay, and then we can go to all. And anyone challenge also, if at all you think which can be hindrance.
Sure, Piyush, it's a very relevant question. So from our perspective, data center industry is about 22 billion today, and it is going to grow in next 5 years about 7.5 to 8 billion from a value perspective. And the main catch in our data center is valuation of these assets, which are multifold. So we see clearly a big change from US or any other developed country. We see a big change which is happening because the asset class is improving. So the bigger challenge is how do we become 100% sustainable? That is a challenge, because policy making and policy we are working, and that if we overcome as soon as possible, this will further boost this industry. Yeah.
Sure. Thanks. Ramek?
Anecdotally, land has been a challenge to acquire the right parcel. So it looks like, landlords have discounted the 20-25% CAGR growth rate for data center industry and mapped that into the land price, because there's been a growth of say 20-25% CAGR in the land prices itself. Having said that, how the government has helped is not only via digitization. You have your e-filing, GST filing, government e-marketplaces. This is the first time that a lot of cloud players have come back and saying that government PSUs are inquiring about taking up space, and there's a big push towards digitization. There is a data center policy in the works at the national level, but at the state level, some of the states have taken lead, and they've really sort of tried to streamline this industry, maybe with a single window clearance. There has been exemptions on stamp duty, subsidy on power tariff, a reduction in the parking space which is required, changes in the building codes. You allow stacking of data center diesel generators. You allow increase in ground coverage, because these tend to be, not vertical buildings, but
Sure.
more of world over G+1, G+2. In India, we are really going for G+5, 6. So these are various incentives which are being given by the state governments to attract investments, since these are multi-billion-dollar investments and they will add to the workforce as well. So government is recognizing it, and I think slowly we are evolving towards an industry status, which will help us in many folds, even in bank fundraising, so on and so forth.
Sure, thanks. Bhavesh, from your perspective, one key challenge and how you think in next 5 years industry will look like? Then we'll go to Subhashish.
Okay. I would like to be more positive rather than the challenge part. Challenge part, I think everybody has mentioned it has the government regulations on land, all that aspect. But I think if we are going to try to see by 2030 that India becomes a $1 trillion real estate market, then data centers, considering the amount of investment which it requires and the future growth, it's basically we are in short supply for data centers if we were to localize the data. So effectively, that's going to be the largest component actually within that. And then the sustainability linked with actually power is a major factor. And if you have sustainable power with renewables and all that, I think it will really work well for India actually from a data center perspective. But I would also like to say that with the population, which is very mobile, the second is very young population, you would see all the market like student accommodation. I mean, I think flex workspace is the next one, co-living is the third one, and student housing, and later after that, even the senior housing. So that is a priority. I think all of these sectors are definitely going to be at a large level. Student accommodation, we didn't discuss much, but actually it's very prevalent in US, Europe, very well done. I think the educational market is going to work towards that. The universities are going to take focus on the education part of it, and the residential part of it is going to be taken by institutional players over time, actually. And actually, so that's really going to work out in the, and we have 35 million migratory students actually, which is a very large number. So to cater to that, actually, these are not the numbers even in US or in Europe. So you can imagine what the factors are going to be at play. Obviously, the challenges of political connects and all that, as he said, is all applicable. But I think in that sequence, actually, data centers, flexi workspace, maybe equal actually kind of thing, co-workspace. Second is co-living. Actually, that's because of the mobility and the job mobility as well as the people mobility. And the next is student housing, and finally the senior living. India is still a place where you prefer parents to be with you. But I think because of the mobility factor of the working population, senior living will really work out in future too on that front too.
Sure. Thanks, Bhavesh. Subhashish.
Piyush, the challenge which this in the co-working industry is currently facing, which needs to be addressed very quickly, is to sell at the right price. With so many operators in the market, there is immense competition, and price cutting is going on, undercutting is going on, and that's eroding everyone's margin. So that's a very key challenge. What I foresee this industry to be at, I think there will be a lot of consolidation happening. There will be 4 or 5 players who will be controlling, say, 70% of the market. And I expect co-working to be the second largest commercial space occupier in 5 years' time. They should be anything around 15-18% of the commercial real estate. That's it.
Thanks, Nikhil, your last word.
On challenges or other things as well?
No, I think let's be positive. Like next 5 years, where do you think the entire shared living will take place?
So I think shared living, shared working, whether it is enterprise hosted or it is small startup hosted, or shared living in terms of large projects or medium projects, as mobility increases, all these are bound to be pieces that ought to work. And mobility is increasing, and pandemic has just given us such a big boost to mobility. I mean, it's ironic. I mean, although it stopped mobility for a very long while, but the irony is we learned that you don't even need to be in office for years and still work happens. So which gives us the confidence that we can really be mobile. You can have your travel dream fulfilled, and you can also have your work going on the side. So, and you can stay with your parents and you can still work. You can live in a community of co-living and you can still work. So I think the mobility is going to be the key drivers, and pandemic has really opened our eyes in terms of our association with that one space per se. And till the time mobility is there as a mega trend, and urban migration, as I said, more or less from rural to urban cities, which is tier 1 or tier 2, these co-working, co-living, and the flexibility is needed. It's long term. We all have good, secure futures.
Yeah, great. I think thanks, Nikhil, and thank you all so much. I think we all end this discussion on a very positive note. I think it's good to hear so much of positivity about these emerging asset classes, and I think it's just gonna emerge, more complementary to our conventional real estate classes. We're talking about doubling the size in most of what we spoke about. So on that note, thank you all for joining this session. Over to you, Manav and Sachin.
Thank you. Thank you, Piyush. Of course, we have come to the conclusion of this wonderful session. And before we conclude, I would like to thank Piyush for wonderfully sort of managing the session and getting the best out of the distinguished panelists. And of course, once again, our heartfelt thanks and gratitude to all the distinguished panelists. And last but not the least, all the participants, all the delegates who have kindly joined us online. I hope all of you have enjoyed the session as much as we did. So till the time we meet next, bye from our side, and take care, stay safe. This particular conference and roundtable stands concluded. Thank you.
Thank you.
Thank you.
Thank you, everyone. Thank you.
Thank you.
Thank you.
It was a pleasure to be here.
Likewise. Thank you.
Thank you.
Thank you. Bye.